You want to replace your monthly wage with dividends. We get it. Who wouldn't? The problem is that dividends are rarely paid monthly.
Far more common are stocks that pay annually, half-yearly or quarterly. For many investors, this is not an ideal way to receive income. Better to have it more spread out evenly across the year.
After all, you have monthly bills to pay. And the council shockingly won't be very understanding when you tell them that you have to wait for your dividend check to come through. And we imagine you'd have quite a few choice words for your employer if they insisted on paying you annually.
So how can we structure our portfolios to pay us monthly, and which stocks would be a good fit for this strategy? Let's check it out. Welcome to Unshackled.com, the investment and finance channel and website that sets you and your finances free.
That was Andy and I'm Ben, and if you like what we say, hit the like button and click subscribe. Stake are sponsoring this video, so we want to give a special shout out to them. Stake offers unlimited commission-free trading in real time, and it is of course FCA regulated.
Stake has fractional investing, so you can now easily afford to buy expensive stocks like Amazon and Tesla.
And for a limited time, Stake are giving away a free US stock worth up to $100 when you sign up via our link. We'll put the link to the offers page in the description below, so be sure to check that out. Now, let's get into the video. Best monthly dividend stocks. Of the thousands of listed companies listed in the US, only 300 of them pay monthly dividends. It's just not that common a practice. It means we need to dig deep to find suitable companies with decent track records.
Number 1. The REITs. Realty Income Corp, Main Street Capital Corp, LTC Properties Inc. REITs are singly well placed to provide you a monthly income. They are companies which hold investment property, and property tends to pay rent monthly.
Also, the unique tax structure of REITs forces them to pass 90% of their income to shareholders. Realty Income is a $20 billion company with a 3.4% dividend yield, which pays out monthly. It has an unbroken record of some 600 months of payouts to investors. Nice.
It even describes itself in its logo as the monthly dividend company. To put that promise front and centre is a cast-iron commitment to its investors. And it is a member of the S&P 500 Dividend Aristocrats Index, an elite club of dividend payers.
Other REITs which pay out monthly include Main Street Capital Corp with a 5.82% dividend yield and LTC Properties Inc. with a yield of 6.06%. Though these entities are smaller operations with market caps of just $2 billion and $1.5 billion respectively.
Number 2. Pembina. A monthly dividend stock in the energy space, Pembina is a $18 billion pipeline operator capable of moving 3 million barrels of oil across its network. Its dividend yield is 7.55% and is established as an unbroken monthly dividend payer since 1998.
Number 3. Shaw. This is a $9 billion Canadian telecoms company yielding 5% and have been paying monthly dividends since 2009. Note that we haven't done any in-depth analysis of these 5 companies. They are just the ones that we think best fit the monthly dividend goal, while offering a decent yield and track record of dividend payments.
Downsides of monthly dividend stocks. Although monthly income is awesome, you shouldn't be basing investment decisions solely on the payment schedule of a stock. As we said at the start, only 300 US companies pay out monthly. This massively limits your choice in what you can invest in. Don't do that to yourself.
Luckily, you don't need to. There's another, in our view, better strategy you can follow, which nets you a monthly income by investing in big blue chip companies. 3
sets of quarterly payers. Many big American companies, which would be described as blue chip dividend stocks, pay dividends quarterly. While not as convenient as monthly payouts, it gives us more to work with as portfolio builders, and there's sound business reasons why we shouldn't want them to pay out more frequently than quarterly, which we'll get to shortly.
For this strategy to work, we can buy stocks in sets based on their payment date and stagger them throughout the year. If we split the calendar into 3, so that January, April, July and October are over here, February, May, August and November here, and March, June, September and December here, we can pick 3 mini portfolios of stocks which pay out their quarterly dividends across these months.
High-yielding dividend stocks paying quarterly to this timetable include multinational pharmaceutical giant GlaxoSmithKline and Coca-Cola. GlaxoSmithKline yields a mighty 6.15%, while Coke yields a decent 3.38%, but also has history of increasing its payouts every year. Technically, Coke makes what would be its January quarter payment a couple of weeks early in mid-December, but we can forgive them 2 weeks. Remember, holidays are coming, and try not to spend it all over Christmas.
For the quarter starting in February, we have the $180 billion telecoms conglomerate AT&T with a jaw-dropping yield of 7.03%. And Verizon, another telecoms conglomerate worth $130 billion, which yields 4.33%. Also in here is AbbVie, a $171 billion blue chip healthcare company which sells around 50 medical drugs products, yielding 4.86%.
And finally, for the quarters starting in March, we have a bank, the Bank of America, yielding 2.96%. We have Johnson & Johnson, the world's biggest healthcare company, yielding 2.73%, and we have a computer technology innovator, Intel, yielding 2.61%. Intel are an interesting company because the share price crashed in July 2020 because they failed to deliver a next generation processor on schedule. Intel are undergoing a reorganisation to get back on track, so maybe this is a dividend stock at a bargain sale price.
Why companies pay quarterly? It's likely not to be in a company's best interest to pay dividends quarterly. In terms of their cash flow, they would prefer them to be annually so they have longer to budget for the payment. Quarterly payments are in recognition of investors' preferences for more regular cash flow.
So why is it so unusual for companies to pay out monthly? One reason is because it severely limits a company's ability to invest in growth. If a company is constantly needing to pay out cash to shareholders, it will struggle to make one-off growth investments, such as acquisitions or expensive research projects.
Quarterly payments at least allow a company's management to base internal investment decisions around a larger dividend horizon. The cash balance can be used up on a growth opportunity, with the expectation that they can build the cash back up again over the next 3 months from sales to meet the next dividend payment.
Companies that feel comfortable paying monthly are rare and are to be celebrated, but we get why it might be a hindrance for most companies, and we want our stocks to perform at their best. Dividend stocks versus dividend ETFs. We love dividend ETFs for their diversification and their returns. In fact, we did a video on the best ones recently, which we'll link to below. But a dividend stocks portfolio has a key advantage over a dividend ETF when it comes to the timing of cash flow.
Many dividend ETFs only pay out twice a year, while we've shown here the foundations of a portfolio of dividend stocks which pays out monthly. We think it's smart to have a good mix of assets in your portfolio, which probably should include dividend stocks if your strategy includes drawing a passive income.
On this channel, we've mostly talked about ETF investing, but in my early investing years, I was investing heavily into dividend paying stocks and monitoring exactly how much money was coming in on a monthly basis. This was a great motivator, as the bigger I grew that portfolio, the bigger the dividend payments were.
Don't base your stocks around timing alone. Your net worth in years to come won't be influenced by whether you received your dividend payments monthly, annually, or anything in between. All that will matter is the return you made, both from dividends and from growth.
Having a monthly income from your portfolio is fantastic, but don't neglect a good buying opportunity just because the payment date is inconvenient.
Question of the day: will you be investing in any of the stocks mentioned in today's video? Let us know in the comments below.
Thanks for watching. On this channel we talk about personal finance, investing and all things money. And if you want to see more great content, please hit the subscribe button below.
This is moneyunshackled.com. See you next time.